Hi there everybody, hope you're doing well. My name is Devansh and I am the lead tutor at FinTutors. If you don't already know, FinTutors holds the Global Pass Rate Excellence Award for 2 years in a row now, and we are proud to present our pre-scene analysis for the November 2024 and February 2025 case study exam, or rather the strategic case study exam. So this pre-scene analysis has been created in a very different, very unique way, highlighting top issues, E3, P3 and F3 syllabus areas, plus helping you understand the company, plus helping you understand what topics to study and how they can come up. Scenarios have been created, and plus giving you tips on how to include material from here in your answers so that you can do well in the final exam. This is the pre-scene analysis created by us, but before I move on, let me tell you that we have a free mini course that you can register for. The link is in the description box below. The mini course is absolutely free. It includes a wealth of explanation, including our one-of-a-kind industry analysis, our blueprint explanations, SEMA blueprints, ICANN statements, our top 10 issues discussion. We are the only tuition provider who has a free mini mock which is timed exactly like the exam, and you receive personalized marking, personalized feedback on the same exactly like the exam. We help you create a study plan, and there is a whole bunch of other bonus material included within this free mini course. I urge you to try it. I want you to make sure that you try it. The link is in the description below. It's from a registered provider. It's from a credible source because we have great pass rates. So, it's just worth a try. Let's put it that way. So the link is in the description below. Do sign up for it. Without further ado, welcome to my pre-scene journey, and you will surely find it helpful. Good luck. Let's start with the introduction directly. So Rotomine is a quoted company that mines lithium for sale to manufacturers, which then use the metal in the manufacture of various products. So like we learnt in our industry analysis, we are only doing the mining part and then giving it to manufacturers who then use it, who are our customers, who then use it to their own benefit, however and whatever product they want to make. But manufacturers include rechargeable batteries. They've written rechargeable batteries as a separate heading. Why? Because again, from the industry analysis, it's very clear that the use of lithium is massively improving or increasing because of its need in the production of batteries which are used in electric vehicles. So this is a major market for us. Now, what we have done is, or what the way of presenting our pre-scene is very unique. We take the entire SEMA pre-scene, then we will annotate it, underline important parts, highlight important parts, and then we will add in E3, P3 and F3 syllabus areas to every discussion wherever we find it important, so that you can learn further in depth about our company and we can link it to important E3, P3 and F3 topic areas, so that you can go forward and study those areas, so that we can test you in our mock questions on those areas, and then naturally you can be ready for the exam. So all the areas that we point out are important areas. They are important study syllabus areas which we need to focus on. So when we have pointed them out for you, please make sure that as an exercise, I ask everybody, take a piece of paper and write down all the topics which I am highlighting for you one by one through this pre-scene analysis. By the end of the pre-scene, you'll have a good list of 40-45 topics which you can study, which you can focus on, which you will be tested on in my mock questions, which are exactly like the exam. And then finally, you will be prepared for the exam, which is my confident guarantee as long as the course is followed. So I will explain the pre-scene to you in a very simple way, in a very story-like way, in a very straightforward way while linking it to E3, P3 and F3 so you understand everything but don't miss out on anything as well. So over here from this first paragraph we learned that we are a quoted company, means we are a listed company, means our shares are traded on the stock exchange. So let's quickly make an advantages, disadvantages of the same just for us to keep this in mind. So advantages are you have capital, access to capital for growth, you have better visibility. Disadvantages are lot of government regulations, lot of reporting requirements which all quoted companies have to go through, but that's the extra hassle. Since you are a listed company, remember it will be important to present your financial statements at the end of the year. And in these financial statements, profitability ratios, lender ratios, investor ratios will be very important for you to understand, you to then diverse to the shareholders, because this is something that your company will be judged on. And why am I saying this? Because these ratios are part of your F3 syllabus area. So you are a senior manager in Rotomine's finance function. Your job is that of a senior manager. So as a senior manager, you need to look at the long-term strategic issues. Your audience is the board of directors, and to give a satisfactory answer, understanding the full scale of the business operations is very, very important, because if you want to convince the shareholders, convince the board of directors, give direction for your company, then naturally you need to know the ins and outs of your company. The place to start with was my extra industry analysis, so hope all of you all have viewed that. If you haven't already, please do. Second is to understand this pre-scene analysis which you're doing, which I'm going to explain to you in depth. But remember, in the strategic case study exam, if you don't know the pre-scene in and out, you don't know your company in and out, you cannot do well on this exam. Now, a lot of people will tell me, okay, I am the senior manager. But what is the role of a senior manager? I've explained this in my introduction video, which all of you have viewed. It's available on the course as well as on YouTube. So I'm assuming you all have viewed it, but sometimes students overlook it. So let me tell you that a senior manager's role or a senior finance manager's role is the long-term focus, diversification related support, project management, risk focus, long-term financing, advising the board of directors. So pretty much strategy is what you are dealing with day in, day out, every day. So the word strategy is going to be one that we hear a lot in the strategic case study exam, because majority of this strategic case study exam is based on your E3 pillar. So the E3 pillar becomes the most important study area, syllabus area for this strategic case study exam, which you will understand in my pre-scene analysis as well. So you report directly to the board and advise on special projects and strategic matters. Again, strategic matters, different forms of strategy, different strategies, different growth strategies. All of this is in your E3 syllabus. One by one, I'll point out the important concepts as well from the E3 syllabus as we go deeper. But the word strategy was being mentioned multiple times, so it was important for me to point out the importance of E3. Now we have taken the actual SEMA pre-scene and then annotated parts on it. So you are not missing out on anything. Just follow my explanations and you are in the right place. So Rotomine's head office is located in Poland, a developed country that has an active and well-regulated stock exchange. So Poland is a developed country. Now Rotomine is located in a developed economy. What do I learn from this? Students often overlook this. But when you're doing the pre-scene with us as experts, we dissect it for you. So when you're in a developed economy, you get the advantages of better infrastructure, high quality workforce. But you have to pay high regulation costs, high regulation rules, rules and regulations need to be followed, and costs are a little bit higher. But let's make a note, Poland being a developed country or economy means my customers will have the interest and the innovation to purchase mined lithium. The lithium which I mine, somebody has to buy it, right? So in developed economies, there will be businesses who want to buy my mined lithium. So I am in the right place in terms of selling my raw material or selling my product. So which tells me that demand conditions are going to be strong. Demand conditions are ones which are going to be strong in our business, and demand conditions is part of your Porter's diamond, which is part of your E3 syllabus. So now I'm pointing out specific topics, not only the syllabus area, topics as well as syllabus area, so you can revise and understand the same. Now Poland's currency is the P dollars. So it's a fictional country, fictional company, fictional currency. Remember that. Poland requires companies to prepare their financial statements in accordance with the IFRS. Rotomine owns and operates lithium mines in 6 countries. Already in my industry analysis, I have given a summary of the currency risks and situations that will arise because of the nature of this market. But very clear and evident over here that you have mines in 6 countries. So a lot of things are being brought over here. First, source of finance. Rotomine might require additional substantial capital to expand or maintain its mines. So cost of debt, cost of equity, financing, funding sources, funding options from your F3 syllabus. Very, very, very important because of the nature of this industry. Second, these are top issues that I am discussing. Transaction risk management. Rotomine operates in 6 countries, which means managing currency risks is critical. There will be capital money movement from one country to another, from Poland to these 6 different countries because we have presence there. So how can we manage the currency risk? Your currency risk management chapter from your transaction risk management chapter from your F3 syllabus is invaluably important here. Next, types of risks. Because you are situated in 6 countries with 6 different governing bodies, governments, geopolitical risks will be very, very prevalent over here. So your risk identification, risk mapping, because we are present in 6 countries, is going to be important. Everything related to risk is in your P3 syllabus. Now you have mapped this risk, but how are you going to manage the risk? So risk management strategies, the risk management matrix from the P3 syllabus, very, very important. So this one small line changes the entire perspective as long as you are aware of the syllabus areas like we are. So studying with a tuition provider makes a difference here. Next, we start with lithium mining. So lithium is a chemical element, an alkali metal designated Li on the periodic table of elements. Very specific market, very specific product. It is used in the manufacture of a variety of products including batteries, heat-resistant glass, ceramics, lubricants, metal alloys, pharmaceuticals, and there is much more use of this metal in the modern world. And the driving factors in the future outlook from the industry analysis needs to be kept into mind. My industry analysis is a very important document. Please go through it. Lithium has been used for many years, primarily in the manufacture of glass and in lubricating grease. Recent growth in demand has been driven by the use of lithium in the manufacture of batteries, in particular electric vehicles. Like I said, lithium has gained a whole lot of popularity because of electric vehicle use. So considering the nature of the business, having a strong external market analysis, customer analysis will be key for us. Could turn out to be a competitive advantage for companies like Rotomine, because if you don't do your good external market analysis, customer analysis, how do you expand the use of lithium? Because if the use of lithium increases, the demand for lithium increases, which means you as a lithium manufacturer or supplier can sell more. So your external market analysis, customer analysis is there in your E3 syllabus. A typical electric car battery requires 12 kg of lithium. The metal is also used in most of the rechargeable batteries used in consumer electronics. In any of your consumer electronics which use rechargeable batteries, like your phones, tablets, all of them use lithium. So you can see the wide-ranging use of lithium. Lithium-ion batteries, coming to the next page, lithium-ion batteries store a significant amount of energy in a relatively small space. That is why lithium is used. The lead-acid batteries, which have been used for many years to power the starter motor and other electrical components in internal combustion engines, can store only 30 watt-hours of electricity in 1 liter of space. A lithium-ion battery can store 250 watt-hours in the same space. That is why its use is prevalent. That is why its use is increasing. Global demand for lithium carbonate was 500,000 tons in 2021, and the annual demand will go to 4 million tons by 2030 as well. So the use is increasing, the popularity is increasing. We have seen this in the industry analysis as well. Now, while I'm seeing this, let's discuss the method of growth. Now, with the rising demand for lithium, Rotomine might explore growth strategies such as mergers, acquisitions, or joint ventures, and this is where your Ansof's matrix and joint venture alliances from your E3 syllabus come into the picture over here. This could help them access new deposits, lithium deposits, increase production capacity. Because demand is increasing, we need to match it or support it with the supply as well, right? Next, the uses of lithium are very, very high that we can see in this diagram over here. Lithium deposits can be found in many locations around the world. It is also present in seawater, although extraction from seawater requires too much energy and it's not commercially viable. It's not commercially something that that businesses do. So competitor analysis will be important over here. So a thorough analysis of the global competitors and the pestle analysis will be important. Rotomine must consider the regulatory challenges, environmental policies within your E3 syllabus before you can start expanding the use of lithium. It's important to look at the competitors, the environment, before you can start actually expanding. This is there in your E3 syllabus. So if you look at the overall dynamic so far that we have established, fraud and ethics management, asset-based valuation is something that I want to speak about. So given the high demand for lithium, Rotomine may face ethical concerns around sourcing, particularly if lithium is extracted from countries with poor labor practices. So here comes your SEMA Code of Ethics, here comes your corporate social responsibility from the E3 syllabus, and fraud risk management from the P3 syllabus. Also related is asset-based valuation. The company's lithium reserves are a major asset. As we go deeper into the pre-scene, we want to understand, we already know that we have 6 mines. So what are our major assets? Rotomine will need to assess the value of these assets, particularly as the price of lithium increases. So asset-based valuation could be used for analyzing the assets of another smaller lithium mining company that we are, for example, acquiring. So your asset based valuation becomes prevalent and can be used in this particular situation as a business valuation technique because of the tangible nature of the asset. A mine is tangible, right? So the F3 syllabus on different valuation techniques comes into the picture over here. Three main methods of lithium extraction are common. We already know this, those who have done my industry analysis. There is hard rock, brine mines, and direct lithium extraction. Hard rock is the most common, then comes your brine, and the smallest is the new, innovative, direct lithium extraction method. We'll deal with all one by one. First one is hard rock mines. So lithium is contained in a number of different rock types. Most commonly in spodumene, which is an ore that can be mined in several parts of the world. So in different parts of the world, the rock spodumene is found. You break this rock, and within this rock, you can find the lithium compound that you are looking for. So lithium can constitute 8% of the content of spodumene. In this entire spodumene rock, only 8% is lithium. Hard rock deposits of lithium are mined mainly by the open pit method. Open pit, open mountain, you start mining or digging it. Blocks of rock containing lithium are dug out of the earth, or there is a mountain, or you dig it out of the earth if it's underground, whatever. They are then crushed and milled to create a fine powder. Generally it's underground, so you start digging underground, and you see the big heavy machinery image over here. That's just an example of how the rock is cut, then it's crushed to create a fine powder. The powdered rock is mixed with water. Bubbles of air are injected into the mixture. So into this mixture, bubbles of air are injected. The bubbles attract lithium while they rise to the water's surface. So to the surface comes the lithium, and the resulting foam is skimmed off. So this lithium that came to the surface is skimmed off and is sent to a plant where it's processed to produce lithium carbonate, the final product which is sold. So you see how intensive this structure is. Open pit mining has significant adverse environmental impacts. It's very obvious. You're digging underground, you're breaking a mountain, generally underground. So soil erosion, destruction of natural habitats, water pollution, emissions from the operation of high mining equipment. You see this sophisticated cutter over here, it's so large. So all of this brings my environmental risk, reputational risk, corporate social responsibility. So the risks are part of my P3 syllabus. CSR, its initiatives, part of the E3 syllabus, and this further links to my IR, integrated reporting, and GRI guidelines, because in the future every company wants to be more sustainable. So if our nature of business itself is so environmentally harmful, how will we be more sustainable? So we need to look out for this deeper into the pre-scene, understanding what my company's strategy is towards sustainability. But on the onset, there are lots of risk because of the nature of this industry. So E3 and P3 syllabus. This was your hard rock mining. Second comes traditional brine mines. So lithium can be found dissolved in underground lakes as well. The lithium can be extracted by pumping this fluid called brine to the surface. Let's say there is a surface, and underground you find a water source, and that water source has lithium content. How do you bring it up? You pump the fluid to the surface, from where it is transferred to evaporation ponds. You can see the image over here. There is a lake next to it. So the water is pumped to the surface. There will be soil under this. Water is pumped to the surface. then transferred to an evaporation pond. The evaporation ponds are huge and can sometimes be 25 square kilometers as well. The brine is exposed to heat and sunlight for 12 to 18 months. You can see how long time cumbersome this is, causing evaporation, thereby concentrating the lithium. Very simple. The concentrated brine is further processed using chemical processes to extract the lithium to form lithium carbonate. Now, brine mining is cheaper than alternative methods, but it can cause environmental damage again because you are pumping the water to the surface. So the surface then pretty much becomes water. So it's damaging to the environment. You use hard rock mining, you use traditional brine mines, it's harming the environment. Now it's very natural that there are different ways of gaining this lithium carbonate. So this market is fragmented. As we know from the industry analysis, there are 4, 5, 6, 7 major players amongst whom the fragments are split, and this market is so capital intensive that it's not simple for anybody to tomorrow start selling lithium carbonate in this market. So your business environment, understanding the business background, understanding the competition in your business from your E3 syllabus becomes a very important aspect over here. Each ton of lithium requires 500,000 liters of water to process. That is a particular problem when mines are located in an area where there is limited water supply. You can see how much water is being used, how much water is being wasted, and all of us know that water is a scarce resource. So if so much is being used, then naturally the environment is being harmed. Again, making this industry environmentally not that positive. Now, evaporation ponds can also pollute local water bodies. The brine can leak into the earth and contaminate the water that would otherwise be used for human consumption or agriculture or for giving to animals. So, evaporation ponds can sometimes be very dangerous. So, mining of lithium includes machines and humans as an active part of the ecosystem. And this raises all different kinds of risks that we have already spoken of. This is going to be an inevitable part of the business, and controlling the same or reducing the same to the highest possible level is important for any business industry. It's very clear, we know that how we have we know examples in the real world of how environmental standards are not followed, safety standards are not followed, and governments have forced companies to pay huge amounts in lawsuits. So identifying risks and managing risks is going to be a very important part in your SCS exam, and this is part of your P3 syllabus. Now, like I told you, I hope you have a list of topics. All the topics that I'm mentioning, I hope you are creating a list of those topics. Side by side, I'm going to ask you to create a list of risks that our company can face because of how risky this business is. Let's put it that way. So have a list of risks also. Health and safety risk, political risk, whatever risk that we have discussed so far, have a list of risks also. So list of important topics, list of risks is what you are doing actively in the background, side by side with my explanations. You see, if you're on this journey with me with concentration, there is no chance that you don't understand our company, because I'm making it easy for you, plus linking it to the E3, P3 and F3 syllabus areas, so that all of us are learning at the same pace, plus important topics are being focused on. Next, we are going to the direct lithium extraction method. Now, direct lithium extraction reduces the environmental impact of lithium extraction by pumping brine to the surface, where it is processed to remove the lithium before returning the brine to its underground source. Complicated but innovative. Let's look at the image. There is the soil level. Below it, there is the underground reservoir. So From the underground reservoir, the red line showcases that the brine is extracted and it directly goes into a tank, which is the lithium extraction processing tank or department or whatever you want to call it. From there, the lithium processing and storage moves ahead. It's separated, and then this leftover brine is injected back into the earth to that same underground reservoir. So pump up the water, remove the lithium, pump back down the water into the reservoir. So this process is essentially an alternative to the traditional brine mines. It is naturally something that is innovative, is more expensive, but it avoids the environmental damage. It also uses solvents to extract the lithium from the brine, so the extraction plants use much less fresh water. So you are saving the environment, plus you're using less water also. Some underground reservoirs are heated by geological processes to temperatures of up to 50 degrees centigrade. So using processes, these reservoirs are heated to 50 degrees centigrade. Liquid at that temperature can power thermal electricity generation, which would enable a direct lithium extraction plant to be self-sufficient in terms of power and to operate without carbon emissions. So these underground reservoirs that you see are heated by geological processes, which means by naturally they could be heated. So this heat can be used to self-suffice the entire extraction process, the entire process of this direct lithium extraction. So it's making it much more carbon efficient as well. So the development of direct lithium extraction and the uses of geothermal energy represents innovative growth methods. Again, this can be linked to your Ansough's matrix, where a new product and a new market altogether has been developed, E3 syllabus. Very few underground brine deposits are hot enough to be viable producers of geothermal electricity, but it is a possibility. That innovation is still pending. It is a possibility to be used, and this is something that my company Rotomine can look at. None are presently being used to generate electricity on a commercial basis. So from innovation and sustainability, the use of geothermal energy aligns with sustainability, innovation, and our strategic approach could be to integrate this method to showcase my innovation, showcase my sustainability. And if this is straight linked to your sustainability innovation P3 syllabus area. So new innovations are happening in this environment as well. Let's put it that way. Next, the three methods of extracting lithium have significantly different environmental impacts. Hard rock mining and traditional brine mining are very, very harmful to the environment. One is by the carbon dioxide, because if you see carbon dioxide, hard rock mining produces 15,000 kg per ton of lithium. Whereas traditional brine mine, less carbon dioxide, but uses 500,000 liters of water. Same way, the traditional mine and the hard rock mine use a lot of space. Direct lithium extraction uses less space, less water, less carbon dioxide emission if you use the geothermal powering that we have spoken of. So naturally, the move towards direct lithium extraction could be the government norm, government regulation, or the innovation that you bring. The above figures are indicative but are also affected by specific circumstances such as the locations of the mines, the purity, and the chemical composition of the ore or brine, and the required purity of the end product that is being extracted. All three methods yield lithium carbonate as the initial product. Everything comes up to lithium carbonate. That can be further processed to create lithium hydroxide, lithium chloride, depending on the use, depending on your customer. Lithium carbonate is the most common product in manufacturing. But the other products are also used in manufacturing, so it depends on the customer's use, the customer's needs. But the initial, any method that you use gives you lithium carbonate. Lithium carbonate can also be processed into butyllithium, which has a number of applications ranging from the production of synthetic rubber to pharmaceuticals. Lithium is used in all different forms in many different markets. It is possible to extract lithium metal from lithium carbonate. The pure metal has some industrial applications, primarily in the manufacture of strong but lightweight metal alloys that are used in aerospace. So in any situation, it's a very specific product that is coming out of lithium use. Lithium is highly volatile in this form, being difficult and dangerous to handle. It can also deteriorate very quickly if it's not stored correctly. So one very important thing, once we make the lithium carbonate, we need to store it, because if we don't store it, it can deteriorate and then you can't sell it. So that's a big, huge loss for your business. And it's very clear that the lithium industry has significant barriers to entry. We have already spoken about this. I cannot tomorrow start mining lithium. It's not that easy. Governments are often reluctant to grant permission to mine for lithium because of the environmental damage associated with open pit mining and evaporation ponds. Direct lithium extraction has fewer environmental concerns but is very expensive to buy suitable sites and then build that plant and operate the plant. So it's expensive, but it's an innovation. So with governments hesitant to grant mining licenses, strategic partnerships or joint ventures with other companies or countries that have easier access to lithium deposits could be a good growth strategy for Rotomine. If one government is not giving me the license, let's find another government, another country who's giving me the license. And if nobody is giving me the license, let me look at direct lithium mining extraction, direct lithium extraction method. Because if nothing's happening, then I can't stop my business. I have to extract the lithium one way or the other. The 4 largest lithium producing companies, one of which is Rotomine. Very important. We are a significant, very large player in this market. So there are 4 large companies. One is Rotomine, account for 50% of the global sales of lithium by value. So from our industry analysis also we learned it's an oligopolistic market, 4 or 5 major players handling everything, majority of the market, which is seen over here as well, and we are one of those players. So you have that dominance in the market to play from. This is discussed later on in a deeper way, but let's note this. So as a significant player in this market, Rotomine's profitability would be closely tied to its cost structure and efficiency of lithium extraction and processing. Its ability to secure high purity deposits and reduce costs would positively affect profitability ratios and investor confidence. So we'll always have to keep innovating if we want to be one of the 4 largest companies in the entire world. You can see how significant this piece of information is and how large your company is going to be. We'll discuss our company's strengths and we'll discuss our company's size when we go to our financials in terms of the numbers. But we work with the information we have in front of us right now. Now, even before I start the next thing or the next subheading, it says spot versus future markets. You should be knowing, or you should have gone through the F3 syllabus for this area. Only then whatever I say will make sense. Only then you will know what a futures market is, what a futures option is, what a futures contract is, because I'm going to speak about the same. Let's start. Most transactions involving lithium are normal commercial credit sales and purchases, with prices and terms of business being agreed at the time of the sale. Today I'm selling to this customer at this price. This is spot price. Lithium is mined and processed into compounds by mining companies. Like we know, you get your lithium carbonate, which can be made into several different lithium sub-products, which is sold to your customer depending on their need. Any given compound such as lithium carbonate is a generic product regardless of the mine from which it was obtained or the mining company who processed it, because lithium carbonate is lithium carbonate wherever it comes from. Lithium is a commodity that has an observable market, same like silver, same like gold. Prices for the commodity itself are set by supply and demand. Demand is more, price goes up. Supply is more, price goes down. Although selling prices on individual transactions will take account of transportation costs, because like we know, lithium mines are scattered all over the world. It could be mined in Australia but needed for production in Europe. So transportation costs will be included on that particular deal. Now, because lithium is a commodity, your commodity price risk gets added to your list of risks. Rotomine is exposed to price fluctuation. Today you have 100,000, let's say 100 kgs of lithium. It's worth $100, for example. Tomorrow price goes up, becomes 120. Price can also go down and become 50, right? So this is your commodity price risk, because your major commodity has an observable market that's based on the supply and demand, whose price rather is based on the supply and demand. So there is a futures derivative. Now, because there is a price that we are speaking about, there is an observable market that we are speaking about, there is going to be speculation. Tomorrow price goes up, tomorrow price can go down. Speculation will always exist. Because there is speculation, a futures derivative exists. Now, there is a futures derivative that allows buyers and sellers to trade in lithium hydroxide contracts. Lithium hydroxide is used primarily for the manufacture of batteries for electric vehicles. Your transaction risk management comes into the picture. You know you are going to need lithium after 6 months. You speculate and you say, as a customer, you speculate and you say that, I'm going to need lithium after 6 months. I'm placing a contract with Rotomine right now itself. It's a futures contract. This price, I will buy lithium from you after 6 months. Then if the price goes up, price goes down, doesn't matter, because it's a contract which has been set. Over here, you can have a forward exchange contract, a futures contract, an option. That different options are available, which is there in your F3 syllabus, but just explaining the system to you over here. This helps mitigate the risk of price fluctuations. This is in your F3 syllabus. Now, both buyers and sellers can use this derivative to manage the risk of price movements in lithium hydroxide. Remember, the derivative market is for lithium hydroxide only, not for any lithium product like lithium carbonate or anything else. For example, movements in lithium hydroxide for periods ranging from 1 month to 15 months. For example, car manufacturers could buy futures contracts that mature in 6 months, guaranteeing the price that will be paid for lithium at that date. Today, I'm getting into a contract with you. After 6 months, I will pay you this much for this much lithium. This is saving that car manufacturer from adverse price movements, because it has an observable market. Every day price will go up or down. Lithium futures contracts are cash settled. On the day of the contract, the payment has to be made. Market participants pay or receive cash to the value of the difference between the market price when the contract is closed out and the price set by the contract. The derivative enables buyers and sellers to fix the prices in advance. Although the pricing of the contracts will reflect market expectations. Today the price is this much, but I know price is going to increase. So I will sell it to you even at a future contract at a little bit of a premium. They can be used as part of a risk management strategy, but it cannot eliminate risk. There is no product in the world that can eliminate risk altogether. Now, I have added a quick, easy summary of the same above. Whatever we read right now, I have added an extra summary of the same, because as always, we want to help you. We want to make it easier for my student. So spot market, what is it? Refers to the buying and selling of lithium today. Prices are agreed upon at the time of sale, and the payment and delivery typically occur in a short time frame. If you want to have a spot market sale, everything will happen in the next 4, 5, 6, 7, let's say 10 days maximum. Example, a battery manufacturer buys lithium carbonate today, agreeing to pay today's market price. Next, we have futures market that we spoke of. The futures market allows buyers and sellers to agree on a price today for a future transaction which is 1 to 15 months. This is for lithium hydroxide only. So this is a lock-in to the price so that price fluctuations are avoided. You can see the benefit. So buyer and the seller agree on the price now, but the actual transaction happens at a later date. However, these contracts are not about physically delivering lithium. They are cash settled. The difference between the contract price and the actual price at the contract's maturity is paid in cash. For example, a car manufacturer anticipates needing lithium hydroxide in 6 months, but wants to avoid paying more if the price goes up. So they buy a futures contract today, which locks in the price regardless of what the actual price will be in 6 months. You bought that futures contract, whatever the price is in 6 months is adjusted and you get it because it's cash settled. With that cash, you go and buy the lithium in the market. You have bought the futures contract. So if the price of the lithium goes down, you will receive that extra money from the person you bought the futures contract from, generally the bank. If the price has gone up, you get that much less, and it's cash settled, so you have the cash with you. You can go and buy the lithium from the market. That is the futures market and how it functions. The key points are risk management. Futures contract helps to manage risk, but it cannot, or no contract in the world can eliminate risk entirely. It's cash settled, so unlike some future contracts where actual goods are delivered, lithium futures are settled in cash, meaning no physical exchange of lithium, just payment based on the price difference, and then you can go and buy that lithium physically. But this is the contract generally with the bank where the difference you are protected by, or difference is protected. In essence, the spot market is for immediate transactions, future market is for future transactions to manage the price risk. So this was a very important revelation that we made over here, very important explanation we made over here, and a lot of students will ignore this, go over this, which will be to their detriment because there is 100% going to be a currency risk management question in the exam, 100%. Now finally, up until now we were speaking of, we first did the introduction of the company, then we did lithium mining market. Now we are finally, after all of this discussion, coming to the discussion of Rotomine, which is my company. Rotomine was founded in the 1950s and was quoted on the Polandian Stock Exchange in 1972. You see how old the company is. You have been in the market for 74 years. Naturally, any business in the whole world, you pick any business that you want, has survived in the market for so long because it has reputation, because it has goodwill, because people are buying their products. In our case, it's a very, very specific product, which is lithium. So it says a lot about the company that we have been able to sustain for 74 years, grow and acquire 6 different mines all over the world. So we are in the market for a long time. We are bound to have a good reputation. So your reputation risk comes into the picture, P3 syllabus. One very important thing which students often overlook. See, we are doing this detailed pre-scene analysis firstly because we have to understand our company. Without understanding the company, you can't do well on the exam. Secondly, while we do the pre-scene analysis, it helps us understand important E3, P3 and F3 topic areas, which I am pointing out for you. But third, I'm doing it so much in detail so that you have great ideas in your mind when you listen to my explanation 2, 3, 4 times. You should have great, solid ideas in your mind which you can use in mock questions. For example, if you're starting to write a question, you can start your answer by saying, we have been in the market for 74 years, so we know what this market is about. And then you go on and write the answer, related to the question, whatever you got to do, which we will teach you. But when you start in that way, when you use information from the pre-scene in your answer, it adds a whole lot of value, business skill, because that's what a senior manager working for any company would do. Make their report, make their answer very, very specific to that company. So the more pre-seen information you use in your answer, the better credit, the better marks you will get. So there are 3 reasons and 3 benefits of doing such a detailed pre-seen analysis together. Initially, Rotomine owned and operated a single large open pit lithium mine with an adjacent processing plant that supplied lithium carbonate to a wide range of industrial customers. The company has grown, obviously. Rotomine now owns and operates 6 hard rock mines and 3 traditional brine mines located in a total of 6 different countries. So different countries, different currencies, currency risk, F3 syllabus. Different countries, different rules and regulations, political risk, P3 syllabus. Different countries, transfer pricing issues. There is a lot of international transfer pricing rules, regulations, and allegations against multinational companies. This is in your P3 syllabus. So I gave you so many important areas to look at. And because there are so many personnel to deal with, such a large company, the strong culture will be needed in this organization, which goes back to your SEMA code of ethics. Everywhere we are pointing out important areas. Hope you are with me. Next, Rotomine is one of the world's 4 largest lithium producers. We already know this. This can be seen as our competitive advantage, and you always need to keep this in mind and something that you can market towards. Rotomine acquired its newest mine in 2004. Very recent, let's say 20 years ago. A mine is a very big investment. Each mine was acquired on the basis of a geological survey, the results of which suggested that there were substantial deposits of lithium that could be mined and processed economically. I'll talk about the COSO model of internal controls here. Because we have various mines in various countries, we will need strong internal controls to ensure compliance, to ensure efficient operations. So the head office's role in strategic planning and having a strong internal control system where the COSO model can be used can be seen as the way forward. So the P3 syllabus coming into the picture here. Now it is unlikely that Rotomine will acquire any further new mines. Lithium can be mined in several regions of the world, but it's difficult to find new viable mines. There are less mines for sale. Lithium mining can be damaging to the environment, and that's why governments don't generally give permissions. We know this. And 7 of Rotomine's mines are located in stable and well-developed countries. Good. But the other 2 are relatively in high-risk countries that lack political and economic stability. At the time of their acquisitions, there were no other mines that met our geological criteria. Now, because there is no, because these countries lack political, economic stability, doesn't mean that we should exploit, we should overuse resources, human resources in that situation, because then that can harm us as a global company reputation. Something for us to keep in mind very clearly. And this brings in your interest rate risk as well, interest rate situation from the F3 syllabus as well, because wherever you have a mine, you are spending money. You could have borrowed money. If there is less economic stability, then you are getting affected. The company's board and senior management team are based at its head office in Portland. Poland's capital city is a convenient location from which to manage our multinational business operations. But we don't have any mines in Poland. So, Poland is our head office, but we don't have any mines in Poland. Now, since we are a listed company, questions can easily come up about raising capital, debt, WACC related decisions. This is your F3 syllabus, which I have pointed out before as well. Keep this in mind. Moving to the next page brings me to the end of the pre-scene analysis part 1. You see how valuable this pre-scene analysis is? In just 1 hour, you have learned so much. We still have 2 more hours to go with the details of the company, with a detailed financial analysis, with a detailed news analysis section at the end of the pre-scene. Everything is detailed in this way, and you will have various E3, P3 and F3 topics to study, which are top issues and which do come up in the exam often. So if you found this helpful, please email us on help@fintutors.com. Somebody from the team will be personally there to answer your email. Or you can visit us on our SCS page, fintutors.com/SCS. You can see the different products that we offer. And sign up there. You will have instant access to our material. Our material is curated for you, very much related to this exam, very much relevant to this exam, and you can just see the details that we provide. Thank you for being here.